Welcome to the NTMA's third quarter investor presentation. Much has happened since our last one. Today we'd like to update you on Ireland's recent market outcomes, also touch on the wide fan chart of potential economic scenarios as a result of Brexit, and finally look at the U-turn from central banks, which of course is positive for Ireland in the market and for the economy. Nobody knows what the eventual outcome will be for Ireland in the event of a no-deal Brexit. The fan chart of outcomes is certainly very wide. But of course, the eventual outcome could be improved by further fiscal stimulus or help, of course, from central banks. Ultimately, if you look at some of the estimates out there, our colleagues in the Department of Finance suggested in their recent summer economic statement that in the event of a no-deal Brexit, in the first year, the deficit may widen by up to €6 billion, or about 3% of gross national income. Talking about that fan chart again earlier, if you look at other estimates out there, there are some outcomes which look a little bit more negative than that, including if we were to apply the Bank of England estimates to the Irish data. But Ireland is starting from a pretty strong base after the last number of years of really strong growth. And of course, the deleveraging plan has been very smooth, leaving Ireland in an excellent position no matter what the outcome is. Recent developments have been favourable for Ireland. If you look at what central banks have been doing recently, they've been reversing course on policy because of the manufacturing recession we've seen globally. Service sectors, which are more important than manufacturing, particularly in Ireland, have held up well. But because of the trade spat between the US and China, we've seen an impact on inflation as well, which has begun to fall. If we look at the US, great news this week is that the Federal Reserve has cut interest rates already. ECB may well follow suit over the next few months by restarting its assets purchase program and potentially by cutting its deposit rate. And of course, there's a changing of the guard at the ECB, where the like-minded Christine Lagarde has taken over from President Mario Draghi. If you look at China then too, there may well be further stimulus to its economy, although so far it has been slow to pick up. Markets, of course, have already front-run these developments in the sense that they've nudged central banks into further easing of policy. The rally in bond markets since the start of the year has been quite stunning. For one example, Ireland's yield on its 30-year bond fell below 1% for the first time ever before recent Brexit developments saw some pickup in yields. To sum up, the NTMA is well prepared for any market scenario, whether that comes from trade tensions, Brexit, or simply another unknown. Of course, the good news for Ireland is that the ECB will endeavour to keep base bond yields near zero. The full presentation is on our website, along with lots more information. And until the fourth quarter update, thank you for your time.